Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Rob Price. Bitcoin, is it sound money or just another risk asset? This is the question many are asking themselves these days. But globally, there's likely to be a monetary regime change coming. What we change into is anyone's guess. Nobody has a crystal ball, and who knows? But Bitcoin could, in fact, be a contender. You never know. Rob is a rational thinker, which I really, really appreciate. So it's nice to have a level head when thinking about this stuff. There's a lot of noise out there, especially around these topics. In this episode, we cover all things Bitcoin, including the current market update, positioning crypto versus Bitcoin, and his investment thesis overall. Before you listen, please don't forget to like or subscribe to the podcast or even leave a review. If you're watching this on YouTube, hello. Please subscribe to the channel and or give it a thumbs up. These things really help and I appreciate it. All right, Rob Price on Bitcoin. Enjoy. Rob, it has been nearly 2 years. I had you on in September 2020, so episode 9. Welcome back, sir. Good to see you on the Alt Asset Allocation podcast again.
Yeah, it's good to see you. And it's funny, most people say it's good to see you like in person, but we see each other in person all the time. So
Well,
it's funny,
well, this
funny
is
to see you
this
on Zoom.
yeah, this is the thing. Actually, you were the first and only in real life interview. And even though we both live in LA and we see each other at least once a week, we co-host Crypto Mondays LA, which anybody in the LA region, come check it out. We're in Venice every Monday. There's about 100 of us. Yeah, we decided to do this virtually again because the audio I think is a lot better. So,
Yeah.
I'll see you every Monday, multiple times, CFA meetups, all the things. Good to see you virtually, sir.
Yeah, it's good to be here.
So September 2020 is crazy, and we were just catching up about this before, but a lot has happened since then. And for my listeners, you did a great job of like listening through that podcast and taking some good notes. So Bitcoin was at 10,000, gold was at 1.8 thousand. Uh, where we are today, this is being recorded early August, so gold roughly flat, Bitcoin 23K or so. What was the most surprising aspect that has happened since with Bitcoin since that interview 2 years ago?
Yeah, so thanks for that context. And I said I really enjoyed listening to the old interview. What I had to say in the past. There's always some things that you're proud of, and other bits that need some work. And what surprised me the most, and particularly in the context of the interview, was actually more related to gold because in the interview we spoke quite a bit about store of value as a concept, monetary regime change, the value of store of value type assets like gold and Bitcoin. And we just, I guess, explained it a lot from the context of gold. And, I was quite bullish on gold. I still am reasonably bullish on gold. But I think what's fascinating is that, gold as an asset has been, well, it's gone up a little bit, but also been flat to down over that period of time, which is really interesting. And I think what we've seen is that the competition posed by Bitcoin and the broader crypto ecosystem, I think, Bitcoin is a much better comparison relative to gold, but the competition posed there has been even stronger than I expected. So, I mean, I always thought to myself that Bitcoin was a big risk to gold, and we didn't probably speak about that in that interview. But I remember speaking to clients in the subsequent months and telling them, listen, Bitcoin is a big risk to gold because at the time I was working for an institutional asset allocator. They didn't have any exposure to Bitcoin, they had exposure to gold. Anyway, that's just a bit of the backstory. But yeah, it's caught me by surprise, and it's good to reflect on that. That essentially, what we have seen is that Bitcoin and crypto has competed a lot of that store of value interest away from gold, and it's fascinating how quickly that has developed, and that's both compelling for Bitcoin, but also, and we maybe get onto some of that later in the interview, but it also does raise questions about the risks to Bitcoin and what competition could be posed by other assets. And it's a reminder not to get too complacent, because it is very easy to get complacent when you have strong long-term views, which as I said might be accurate in terms of philosophically and theoretically, but execution is another thing, and markets can do things you don't expect.
Humble you quickly. No, that's very, very much well said. And the crazy thing is that like Bitcoin taking market share from gold, this was almost a meme and like uttered by like Bitcoin maximalists, but it probably shows in the data. So it in this podcast today, I mean, want to talk at length about Bitcoin, where we are now, where we could be going. But since we did touch on gold so much, and I think that actually helps kind of paint the picture, let's talk a bit about gold's performance, and just kind of riff on gold, a kind of a gold update before jumping into more Bitcoin related topics.
Yes, I mean, essentially, I think what you've seen there is that, yeah, when one aspect is Bitcoin certainly has competed some of that, yeah, the speculative components of gold. Gold bull markets historically would tend to, gather steam uh, in a and have that kind of that retail speculation component driving them. A lot of the early long-term investors, or sorry, the long-term investors, the institutional investors, the guys that really understand gold, really understand the concept of store of value, they'd be holding for long periods of time, and then price would tick up, and then retail would get in and push that gold bull market further, much higher, and basically gold did bounce above its all-time highs, and then it just kind of petered out from there, which was surprising. So yeah, I do think that retail speculation component was competed away by Bitcoin, and the other component that is there was a real impact from traditional financial markets is that you have seen that real rates did increase, not necessarily straight after we were speaking. They were flat for a period of time, but they kind of bottomed. Real rates, if you look at the real, say, real 5-year bond yields, 5-year bond yield less 5-year inflation expectation, something like that, they did start to shift higher through 2021, and that does have an impact on the viability, the attractiveness of store of value assets, that it always has done. And Bitcoin has eventually felt that impact, but it just it was more acutely felt on gold, and earlier on gold. Listen, I still do think that there is a place for gold. But yeah, when now that I'm sitting in a seat where I'm no longer constrained in the choice of assets, when making recommendations to allocators, I mean, I definitely would focus more on Bitcoin relative to gold. But listen, as I said, there's still always a case. We can go down that rabbit hole of there are potentially some advantages of having something physical. But anyway, I'd much rather argue for the other side of that case, that having this truly global distributed, much scarcer asset that's on a global network that you can actually use you can also use technology to make it effective on a day-to-day basis, and you can use Bitcoin. It might not be perfect, but there are all sorts of technologies to actually be able to make you able to execute on a payment on a day-to-day basis, and that's obviously very tricky with gold. But anyway, that's kind of the theory again. But I think the gold, the two main factors here is being competed with Bitcoin, and the rise in real rates that actually did start taking place in early 2021, and they now have peaked out in the other direction. But that certainly had an impact on gold markets.
Yeah, that damn shiny yellow rock, right? It's been around for store value for thousands of years. It's probably not going to disappear anytime soon. But there's a contender in the ring these days. So, I mean, Bitcoin, I feel like feel like the narrative has changed quite a bit. Like, Satoshi's white paper when it first came out in 2009 was peer-to-peer digital cash. And now it sounds like it's, more of a store of value, but there's still use it for the day-to-day transactions. It's this inflation hedge. Just kidding. It's a 99% correlated with the NASDAQ. There's a bunch of different like competing
Yeah.
narratives with what Bitcoin is, why it's important. So let's just go back and like talk about the value proposition of Bitcoin to you, why it's so important, which people can listen to our last episode. But I think it's great to like recenter on that, and then we'll go into an update of where we are now, leading into like where we could be going. Does that sound all right?
Yeah, for sure. And yeah, I'll allow you to pull on these different threads because there certainly are many of them. But yeah, for me, the short answer here is that I see, what governments have done to our money is the biggest problem we face in the 2020s. The cause of so many economic, social, financial problems that we face. This corruption and just continued distortion of our money, and we can get into those reasons if you like, but I'll keep it short there. But it's just the biggest challenge that we face, and that we do genuinely need a alternative monetary system. Actually, the world does historically go through phases of well, goes through different monetary regimes. Even in the last 100 years, we've had numerous monetary regimes. Pre-World War II, we had a gold standard. Post-World War II, we had a pseudo gold standard. Post 1972, 1973, we've had this dollar reserve standard. So there's historical precedents that the regime will change, and there is clear evidence that we're at some sort of precipice at the moment, with debt levels at the most extreme levels they've been since World War II. Interest rates probably at the lowest levels they've ever in the history of humans. And so we're at this precipice. You've got this monetary regime change. In my perspective, it's the cause of a lot of the problems we face. History tells us that it will change, but what's it going to change to? And I think one of the reasons why it's not changing maybe as dramatically as one might think, given how extreme the conditions are, is what to. We're not going to change to a yuan standard or a euro standard or a pound standard. Those monetary systems are no better than the dollar. And so where do we go? And I do see Bitcoin in that position, and the rest of the cryptocurrency ecosystem. But for me, a monetary system is always based on a very sound foundation, and we can get on to talking about other crypto assets. And I'm not a Bitcoin maximist that I think that there's no value elsewhere, but I do think that the center of a monetary regime, a monetary system, it makes sense to have something very secure, very sound, very scarce, very very clear, very simple, and very low risk. And Bitcoin kind of fits that bill. So it is this scarce digital asset that is decentralized and secure, and could play the role as the reserve asset of some sort of future financial system. And I think it kind of plays that role as the reserve asset of crypto today. But I mean, that maybe is a bit more of a contentious point. But I do think it plays that role. But to your point, I mean, that is a narrative. I am aware of that, and that it wasn't necessarily what Bitcoin was created for. The Satoshi and all the subsequent developers, they were just trying to create a digital cash, a digital asset, and they obviously did create that. But in order for that asset to have any value, it needs to have scarcity. Hence why the scarcity principle is there. And I mean, this is a slightly different point, but when thinking about these different narratives of store of value versus medium of exchange, for me it's quite clear in the world today that we need a store of value more than we need a medium of exchange. So when I think back to the choices made in Bitcoin development over the years, it makes a lot of sense to me that developers prioritized store of value and security, scarcity, and the decentralized nature of Bitcoin, which obviously feeds into the security and the ability to remain scarce over long periods of time, because it's difficult to change the protocol because it is decentralized and distributed. But yeah, that prioritization of the scarcity and the decentralized nature makes sense to me relative to medium of exchange, because we don't while medium of exchange is, you would prefer Bitcoin to be a better medium of exchange, like kind of all else equal, but it's much more important that it's a good store of value than it is a good medium of exchange. Dollars aren't a terrible medium of exchange. And of course, that's also where the rest of the cryptocurrency ecosystem comes through in creating some of these other innovations which solve some other problems that Bitcoin hasn't necessarily solved.
Mm. Yeah, and I mean that peer-to-peer permissionless, censorship-resistant value transfer. It's what's so powerful with this. But I want to kind of double click on the like monetary regime change. I mean, you're exactly right. The yuan, euro, pound, yen, like what the heck are you going to abandon the dollar for? One of these, like, as an American, sorry, but like, it's probably better than these other ones. So it's like jumping from one boiling pot of water into another. But like, if
Yeah,
there's a complete collapse of US dollar and Bitcoin replaces everything as the global reserve currency, I mean, it's basically pitchforks and torches, and I'd rather have a shotgun in a bunker probably than like a whole bunch of Bitcoin in that scenario. So what's kind of the ideal, like what does a transition look like? Or what's like the perfect storm for Bitcoin as it fits into like this new whatever it comes out on the other side of like a monetary regime change.
yeah. So just before also getting onto that question of the transition, just one point to add there, that like philosophically, or the way I think, and maybe slightly less with the yuan, because they do have a slightly different kind of financial system to the West. But thinking about the euro and the yen and the pound and the CAD and the Aussie dollar, I see them as almost part of the same monetary regime as the dollar anyway, right? They're all part of this dollar standard. They're all interlinked. The dollar is the reserve currency of the world, and it is kind of the reserve currency for all these other currency regimes around the world. So the idea that you're going to shift, it's like that's there, euro and pound and CAD and Aussie dollar are like layer two currencies on top of US dollars as layer one. You're not going to choose. You're going to shift to your layer two as now your reserve asset. That's never going to happen. So on this question of transition, I mean, I'm certainly not foolhardy enough to think that I know the answer. All I know is that people will slowly gravitate towards better technologies. That's already what is happening, and those people, families, communities, companies, societies that gravitate towards these sounder assets put themselves in a better stead. And I completely hear what you're saying in terms of like collapse of the monetary system. That would be disastrous in a world that we kind of don't want to live in. But I do think that Bitcoin and crypto, they really are this lifeline. They are this transitional asset. They're giving people an opportunity to already be on a different monetary standard. Some people are actually on a different monetary standard. They denominate their wealth in Bitcoin and other crypto assets. They transact mostly in these assets. So if you were to get some sort of crash in the monetary regime, which I don't think that we will have, but I mean that's, I guess, possible. But at least those people would be protected because they would have they would have some assets in order to function in a different monetary standard. And as time goes on, you're going to have more and more people in the crypto standard, and so at least there is actually a competing alternative. So I mean, as I said, I don't know exactly what the future holds, but I just know that over time you're going to have a greater share of people on this new standard, and that's robust. That provides us with this lifeline. And hopefully the transition doesn't look dystopian. But the world is seeing lots of dystopian times at the moment. In fact, we could look back in 20 years' time and think that 2022 was pretty dystopian. There are some pretty dystopian things going on already. So, but yeah, anyway, I don't know what that future holds, but I think this provides us with some of a reasonably robust transition period that wouldn't have existed elsewhere. I mean, imagine how depressing things would be if we didn't have Bitcoin and crypto. Uh, what?
Well, I think we live in our echo chamber at times, right? Because for me as well, it provides like this new hope. But there's a lot of people that just could give two shits about crypto. So like that hasn't been in their like lexicon of what they're going through day to day at all.
Agreed, and that makes sense. But also, I mean, think about the newcomers that do come to crypto, learn some foundational principles, and think about the light in their eyes when they
Oh my
pitch up
God.
and you meet
I
them in
love it.
person.
I love it so
They
much.
they're dealing with all of this stress in their life. It's not that it solves your problems immediately, but intellectually, it gives people an opportunity to make some connections between some of the problems we deal with and our monetary system. And they piece that together and like, oh, okay. And there's this asset that could potentially, I mean, not necessarily, we don't want to speak about it, in a utopian sense that it's going to solve all of our problems, but it has the potential to. And I mean, humans need some hope.
Oh yeah.
It's a
Oh
very
yeah.
powerful, and this has it's hope based on, I think, some some sound foundations and principles and philosophies.
No, I agree. And that's part of like what these like crypto Mondays and things like it, you see people for the first time that are just falling down the rabbit hole and just come ready, so eager and hungry to learn for knowledge, for new things that are moving around, just to like be this sponge to absorb everything that's happening. And it's energizing for guys like us that have been in for a while, to see it through new eyes. And also like makes you realize how kind of early and easy and not easy it is for people to like understand it, right? Because you like end up in this like the weeds of definition soup, and you like lose the forest from the trees because there's a lot of stuff.
Mm.
So yeah, it also is helpful as like a potential educator and thinking like, okay, put your feet back down on the ground. These are the principles you have to understand. These are the important things. Ignore everything else at first, and then you can get there, or at least in my experience.
Yeah, and I'm interested to get your thoughts on this. But would you think that it's more difficult for newcomers? And there's more educational content, obviously, today than there was 5 years ago.
Yeah,
But is it
but
more
it's
difficult?
paralysis by overanalysis, right? Like,
Yeah, and there's more. There's many more use cases for crypto now, and many more crypto projects. So does that make it more difficult for a newcomer to determine what are the key principles?
definitely. I mean, I think it makes it both more open because now if you're a musician, you have a clear like use of crypto and how it could be used, but also more intimidating because that person has found themselves into music NFTs and how it disrupts this, and then they start finding out about everything else. So, um, both. It's an interesting one because it onboards a lot more people, but it also just makes it so like insurmountable, and even somebody like me who used to take pride in kind of knowing what was going on all these different blockchains and all these
Yeah.
different niches, and now it's like I could spend 30 hours a day on my computer, which is impossible, and I still would be completely behind on everything. Like,
Mm.
so it's like you got to kind of niche down because every global 24/7 365, like you have people kind of iterating on different things on different blockchains. And like we were talking the other night, we Rob hosted a CFA meetup in LA, and there's a team that has been building games on Bitcoin Satoshi's vision, BSV, which most people believe is like a complete ghost chain and nothing's happening. I had no idea there was a whole ecosystem. So it's like you kind of stay in your own lane.
Yeah,
Yeah.
no, I mean, I think you summed it up well. There's definitely upsides to all of the new use cases and the way they're bringing in new people, particularly creatives, the NFT world. But yeah, I
Oh
do.
yeah.
Yeah, the other side to this coin is that I do worry that people don't get the key principles. And listen, I'm obviously biased, but I think that understanding money and the monetary regime is definitely the most important thing in the world, and is crypto's number one use case. And if
Yeah.
we if we ignore that use case, then I do worry about our future. But that's me.
No, and I mean, since in the last 2 years, I mean, you have your CFA, you've been always kind of talking to institutional clients about crypto or gold, like, in that same character, but now you have your own fund. Uh, so I'd be curious, just you're talking to people all day long about allocating a portion of their net worth into crypto, like based on these sound money principles. What sort of common pushbacks or misconceptions do you have most when talking to these institutions about allocating to crypto?
Yeah, I would think that the biggest misconception just in general is probably still this question about like what is it useful for. I think it still flummoxes numerous different people. Um, you know, and I do understand why, because coming back right to the start of the conversation, you're talking about monetary regime change. And then in that context, you're like, well, I mean, yeah, I see your point. We could be moving to a different monetary regime. Yeah, maybe I need some Bitcoin, but it doesn't feel very useful. It's definitely a long-term risk mitigating measure, but is that useful in the short term? And I guess maybe that's the challenge of this technology, is that uh conceptually it can be difficult to like understand the different layers, but yeah, to me, and it's not just about Bitcoin, it's the same thing, think it's just actually the same argument with stable coins. So people ask, why are stable coins useful? I mean, I can use dollars, right? But stable coins are on a global network. Dollars are not actually on a global network. You have to go through all of these intermediaries in order to make transactions. And then if you want to send, dollars to somebody, in just a non-dollar denominated country, particularly if they're outside, the Western world, doesn't necessarily need to be an underdeveloped country, just, maybe like outside of Europe and Canada, and the UK. And it's more of a challenge, right? Like some people, how do they receive those dollars without having a US bank account? Well, with stable coins, you can just set up a crypto account and you can receive dollars. So you've got access to this global payments network. And of course, Bitcoin does have those characteristics and other characteristics, but that's one of the ones that I find is incredibly interesting. How still I have these conversations all the time about what is this thing actually useful for? I mean, it seems so obvious to me. The use cases are abundant all the way around the world, in numerous different jurisdictions, and you don't need to think about. Once again, I'm not saying that these other use cases in crypto are not useful, but you don't need to even use cases in like DeFi and options and futures and NFTs. It's just something like, stable coins and Bitcoin. Having a global payments network is very useful, and we don't actually have that. So that's one of the biggest misconceptions that I see out there today. Yeah.
And what sort of like aha moment do you typically have for people to like get over the line? Do you send them a little bit Bitcoin and you see like the instant finality, or is there what kind of trick have you found, or not trick? That sounds negative, but what sort of
Yeah.
thing kind of gets them over the line?
There's no easy answer to that question. I mean, I'd love to know your answer, but for me, it's about, it's about speaking to people, building relationships, having a like a one-on-one relationship with somebody, making sure that you're available, and trying out all the, I mean, all the tricks of the trade. And obviously, that's nothing nefarious about it. Yeah, speaking to them, sending them Bitcoin, that often helps, and just giving the ideas time, and following up with videos. But yeah, just building those relationships, and coming back, specifically to institutions. It's still actually the same. So it's the same thing. They are understandably more conservative. They're not. I often say that FOMO is one of Bitcoin and cryptos, and maybe its its best marketing tool, because people just respond to FOMO. They see price going up, they eventually buy some, and then they're in the market, and they tend to learn more about it. Listen, I don't want people to respond to FOMO. I'm just saying it happens like that. Now, with institutions, well, I mean, they're not so receptive to FOMO, because they've been in financial markets for a long period of time, and they will refuse to make decisions purely based on FOMO grounds. But they are, they are, as inverted commas, people always say they are coming, but they are coming. They just take a bit more time. They want to do all of their due diligence. They want to due diligence on the actual fund. They want to see long track records. They of course are interested in the asset class. How does this asset class perform during numerous different regimes? They're deeply skeptical, and they are maybe if there's the biggest stumbling block I see is the reputational damage. So a lot of large institutional allocators are quite conservative by nature, and they are concerned about the reputational impact that could be created once they make an allocation, and so that's just another stumbling block. And so I think that overcoming that, once again, is just building this familiarity over time until they get to such a point that you've removed all of the hurdles.
Well, it's just like persistence at this point, right? I mean, I was talking about this at your meetup last week, and again, this was a chartered financial analyst meetup. So CFA, top money manager designation in the world, and these guys just have like a healthy. Most of them, they're 30 people, so small segment, but like just a healthy skepticism of Bitcoin in general, and I'm just like, guys, aren't the stakes getting too high? Like the reputational risk at this point is like so low. You have sovereign nations and massive corporate companies with billions of dollars of Bitcoin on their balance sheet at this point. Like other pensions have gone in. You're no longer just that lone guy out there like, hey, Bitcoin. It's gotten to this point where now, I don't know, you put 1% in and it blows up. Like, oh no, 1%. But like, there's a lot of other people betting a lot more than 1% on it. So I think the reputational thing is like gonna get less and less, and it reputationally to not irresponsible not to have any Bitcoin or crypto starts kind of taking its place.
100%. And I mean, now that you're speaking, another one just to think about here is there definitely are regulatory consequences on some types of institutions.
Fair.
So maybe yes. I'm thinking about, I am mostly focused on family office space where they aren't as constrained regulatory. But if I think back to some of the guys we spoke to a few weeks ago at the CFA event, working for highly regulated financial institutions.
They can't even do high yield bonds, right?
Like, exactly. So they can't access alternatives. So it's not on the list. It's not on the suite of potential products. And then even for ones that aren't constrained like that, if I think about the institution I used to work for, they are still a highly regulated pension fund, and often way an institution runs that has got so large like that, they are more concerned about the reputational damage and the losing clients than necessarily the best risk-adjusted returns. Like if you look at the risk-adjusted returns of adding small amounts of crypto to a portfolio, it's an absolute no-brainer. It really is a no-brainer. But for them, they're not always thinking about the risk-adjusted returns as they should be. And this was one of my frustrations at a large institution like that. And it's no blame at the one that I was at. I really do think they are all like this. It's like part of the problem with the industry. But because they are aligned in such a way, they're more thinking of it doesn't pay us to go out on a limb here. Am I gonna lose my job? Is that client going to fire us? We have this big contract with that government department. Are they going to kick us out now because we've spoken about Bitcoin? And so, as you're right, we will get to the point where there's some sort of tipping point for some institutions, but for the very conservative ones, even if it's only like 1% of their clients, if they think that is the case, they'll make a decision based on that, even though that's actually not logical and the expected value of the decision doesn't make sense. But that's the way they think through it. Because one advisor, one senior advisor is saying, no, but my client will fire us if you put this into the portfolio. And then the people in the investment team are like, okay, cool, well, we won't do it. So they're often looking for reasons for inaction.
Yep.
That
Yep.
happens at large institutions, that they become like biased towards inaction.
Yeah. No, that totally makes sense. All right. So talked about like the long-term bull for Bitcoin, why it's important, which I think is super, super important, but a bit of like, lost in the noise. Everybody's always asking, I love it. Actually, I hate it. But, as being a crypto person, people are like, oh, what should I buy? Where's it going? So talk a little bit more about short term. You do track these things, current price, where we are in the cycle, kind of more near term, and pick whatever time frame makes the most sense. But like Bitcoin is down off 60+% from its highs. Per the usual with these booms and busts, lots of people buy in right near the top and then they find themselves, down 50% and kind of ignore it for the next couple of years. No bit goes up. But talk to me about where we are in like the cycle in terms of price and adoption or whatever's relevant.
Sure. And I must always just, say before going into those comments that obviously none of this is financial advice. Yeah, where are we in the cycle? I think that the key factor that people do forget when they get deep down the crypto rabbit hole is, Bitcoin is still a macro asset, and crypto is part of that same ecosystem. And so, the tightening of liquidity by the Fed and other central banks was obviously a key factor in causing this bear market that we've had. And I do think that it's starting to turn. We are seeing the yield curve looks like it's starting to bottom. If you look at long dated rates, they look like they're starting to turn over. Inflation there's obviously starting to be some sort of downside risk to inflation. So the cycle is turning from that respect. A macro indicator for me hasn't like 100% confirmed that we are on the other side of that cycle, but that's what it's looking like. It's going to show that over the coming months. And once that turns, that will be a much bigger headwind, a much bigger supporting factor towards Bitcoin and crypto. So that's critical. And then looking particularly or specifically within crypto markets themselves. And I do focus my investment process, because it is a macro focused process on the kind of the macro variables. And I do think that, as I mentioned earlier, that Bitcoin is the reserve asset of crypto. And so if you look at below the surface in Bitcoin markets, you can see that there has been a fair amount of capitulation. We talk about capitulation, and you see institutions like Celsius and 3 Arrows Capital capitulating on their holdings, but you can actually track that below the surface. You can look at realized losses on chain with Bitcoin, and we've seen deep realized losses. So clearly there's been a lot of capitulation, forced sellers, and it's good to obviously to analyze that within the news, but for me it's always good to see it in hard data. And capitulation does often mark the end of a cycle, because if you've had so many forced sellers, like who else is left to sell? And then the other component that's related to that, of course, is Bitcoin miners. It's something that you have seen people speaking about in recent months. But once again, the data is starting to show us that hash rate in Bitcoin is declining. That means that miners are taking their miners offline, that they aren't as profitable as they used to be. And what you find historically is Bitcoin miners are a very pro-cyclical force in crypto, that they during a bull market, just like other participants, right? They're forecasting this thing to carry on far into the future, and so they sit on a lot of Bitcoin. They're basically like leveraged Bitcoin, and you can see that in the price of the performance of these shares, the ones that are listed. So they sit on that Bitcoin, and then the cycle turns, and they still have these positive expectations, but as the cycle deteriorates, they lose hope on those expectations, and eventually they capitulate on their holdings, which is right about now. So a lot of Bitcoin miners are now selling down their holdings, and of course, once they reach a certain level or zero, they've got no more to sell. So also another signal of capitulation. And listen, none of the factors that I've mentioned here are going to predict a bottom with certainty, but you're seeing that body of evidence emerge that a bottom is clearly forming, and that's a really important piece of information. And of course, when managing a portfolio, you can't you shouldn't just rely on one piece of information and just act on that alone. Because also, just because a bottom is falling doesn't mean that we're going up to new all-time highs immediately. I think there's still a lot of risk in the markets, and one of the things that I do think is particularly interesting is the uptick in leverage that we've seen. Maybe less so the kind of hidden leverage, because I think a lot of the hidden leverage in crypto was washed out over the last few months. Kind of the hidden leverage in places like Celsius and BlockFi and Three Arrows Capital. There was a lot of leverage there that I wasn't properly taking account of. But the leverage in like futures markets has risen aggressively over the last couple of months, particularly on Ethereum, and that just is something to be cautious about. It's something leverage can be liquidated even quicker than it was created. So that's just something to keep an eye on. But as I said, none of this is financial advice. But for me, when I'm thinking about the cycle, we're approaching a bottom. This is not a time to be looking to sell down all of your holdings. But yeah, sure, maybe there's profit taking on the way up. If leverage gets overheated, the probability of retesting the lows is certainly not zero. And while traditional financial markets look like we are approaching some sort of macro bottom, that also doesn't mean you can't get a washout at the end of the day. If you look at things like LIBOR OIS, which assesses interbank liquidity in traditional financial markets, it's ticking up. That ticks up far enough. Well, then you get a March 2020 type event, and of course, crypto is not going to be spared at all in that type of event. Then a dip down to 14,000 on Bitcoin is definitely in the realms of possibility. So, no one knows exactly what the future holds, but yeah, in the balance of probabilities, we're clearly approaching bottom.
Yeah, but important, like you were saying, is like there's still a possibility of this thing nuking by 50%, negative 50%, if there's some massive macro issue, right? Because it's still highly, highly levered. But I think the frustrating thing for me is like, these maxims like don't fight the Fed, it's all one trade, like all of this, that it's just the tail wags the dog in terms of macro and crypto. So are you just, when thinking about this and the bottom, how much of this are you like, what percentage monitoring macro versus like actual on-chain data in terms of Bitcoin, and how are you thinking through this? Because macro is the big dog in the room, right?
Yeah. And maybe even maybe a way to even like rephrase that question is because a question that I often do get is about the correlation basically between TradFi and Bitcoin and crypto, or between equity markets, the Nasdaq and Bitcoin or Ethereum. Doesn't matter which way you slice and dice it. The correlation is strong. So yeah, the way I think about it, listen, Bitcoin is a macro asset. It is driven by macro cycles. To dismiss that would be foolhardy, and the evidence suggests otherwise. But that doesn't mean that that there aren't idiosyncratic drivers, and history confirms as much. If you look at the historical correlation, and the correlation is obviously that's the quantitative outcome of this concept that we're talking about. So the correlation between Bitcoin and the S&P 500 has oscillated over time, and it averages about 0.1. So it's pretty uncorrelated. Of course, the correlation has been stronger recently. It makes sense, right? As soon as the asset class becomes more adopted, the penetration is higher, you're going to get overlap in the investors that are holding both assets. And so they're going to trade them on some, they can trade them on similar factors. But still, there's historical precedence that the correlation oscillates. I think that there's reason to believe that that will continue for a few different reasons. One, if you also look at other asset classes, something like gold and equity markets, there also have been times when gold and equity markets have been strongly correlated with each other. And there's reasons why that would exist. As a simple example, liquidity can drive financial markets, and it can drive gold and equity markets higher at the same time, and gold and equity markets and Bitcoin all higher at the same time, and the correlation can be strong. But just because the correlation is high for a point in time doesn't mean that that's going to persist indefinitely. I think that's a mistake, because the historical precedence doesn't suggest as much. And then if you look at actual fundamentals, okay, so why is this correlation going to break down? Well, I think that there's also reason to believe that that will take place. I think the two key factors that come to my mind is, one, if you look at that correlation between Bitcoin and the S&P 500, it tends to be stronger when equity markets are weak. So, when liquidity is kind of being pulled out of traditional financial markets, everything kind of weakens. Obviously, there's some assets that can do better in those conditions, but it comes to your point about it all being kind of one trade, particularly on the downside. It's all one trade
when you actually need it as a hedge. Damn.
Yes, and that's maybe that's something to dig into. So I still think that Bitcoin can be an uncorrelated asset, but it's clearly not. It's not uncorrelated on the downside, which is from a sales perspective and marketing perspective is it reduces the attractiveness of that component, which is something, of course, to consider. But yeah, then the other component to consider, well, just I guess completing that thought, I don't think we're going to be in an equity down market indefinitely. I don't think liquidity is going to be tight indefinitely. So as a result, there is opportunity there for that correlation to break again at some point in the future. And then another fundamental factor that I think is potentially the most important one is that the holders of Bitcoin do change over time, and that's something that you can actually get quite good data on. So because we've got blockchain data, and you can see how you can't see exactly who the holders are when you can see their addresses, but the aggregated data that is useful to look at is when is the last time that these addresses kind of saw movement, which can give you an assessment of how liquid or illiquid those addresses are. And basically what you see in Bitcoin markets at the moment is that a lot of holdings are shifting towards long-term holders, right? The more illiquid holders, the people who are less likely to sell. And that's the same dynamic that you've seen during every Bitcoin bear market, that holdings move to these long-term illiquid holders. And as that takes place, that is clearly a factor that can drive the kind of the short-term change in short-term market structure,
Right.
because it's moving away from those more short-term speculator type investors, and therefore the overlap of people who are trading both Bitcoin and Ethereum and equity markets all kind of together, and therefore driving the strong correlation. That is, those people are a much smaller share of the market. Listen, they'll probably grow again, and the equity market correlation between the correlation between Bitcoin and equity markets will probably pick up again sometime in the future. But I think that there's strong reason to believe that it can break down again. So, that's a long answer to your question, but I think it is important to go some of that detail, because I do get that question so often. But yeah, when thinking about investments, unfortunately, there always are these different factors to take into account, both the macro conditions as well as the internals within crypto markets themselves.
Yeah. No, and unfortunately, in these down markets, correlations kind of trend towards one with many assets, right? So I'd be curious, like leaving out perhaps the macro, because I don't think we have time to go into too much of that, and that's a very deep subject. But in terms of like within the crypto ecosystem, what sort of catalysts could we see to kind of see us to new highs or like this next leg of the bull market, or kind of what's the most bullish scenario for Bitcoin in terms of price action?
Yeah, I mean, I think that the most bullish outcome would be, something like, nation state adoption, more nation states. That would be, I think that would be a powerful narrative, towards this kind of, this reserve asset outcome that people, speak about. I think that it's also possible that, Ethereum's move to proof of stake could offer an investment case narrative of ETH being this like kind of this yielding asset, some sort of like pseudo crypto bond. I mean, as for me, I'm just like a skeptic at heart, so I want to see the proof in the pudding that they've actually got there and it's all working fine. But from a narrative perspective, I can see how that is compelling, and you're clearly seeing a number of people talk about it, in the market at the moment. And then clearly, I mean, it's, tying in everything we've spoken about here. Of course, if the Fed loosens aggressively, I mean, that is going to be incredibly positive for crypto, for Bitcoin, because as I said, these are, at the end of the day, they are macro assets. They're driven by liquidity, and so until such time as we see some sort of loosening in liquidity, it's difficult to see us in a sustained bull market. At the moment, what's driving the market is just existing holders who have cash on the sidelines, reallocating that cash into crypto at lower prices predominantly, and less so seeing big, large new flows. And I guess that's the point that you're getting at, is that you for that you need some sort of new compelling narrative, and those would be the ones that I would be watching out for: nation state adoption, the potentially ETH post the shift to proof of stake, and of course Fed loosening, and just people. I think a lot of investors, when that happens, will see, there's potentially even like consensus that crypto is the fastest horse in that race. So that is the most compelling of all of them. And it could be very powerful when it does emerge.
Well, it's frustrating, like being in a bear market. I mean, like this Coinbase and BlackRock announcement. This is the type of thing in a bull market, like the entire market would have jumped by like 30%, just trillions of dollars of value. Like, the institutions are coming. It's like these are the plumbing and the big moves that we need. And it's just like, oh, Coinbase partnering with BlackRock, no big deal. Like very, so that those sorts of things I would think would be the catalyst to bring on like massive amounts of liquidity and new entrants into the space. It's kind of like the foundational pieces that need to be set. But narratives kind of run amok in crypto. What about the reverse? So like a bearish scenario for Bitcoin, obviously like liquidity tightening, but would be curious your thoughts.
Yeah, I mean that's the key one, and that's also a very interesting one, because it's both bearish short term, but also actually bullish, right? Because I think that as soon as you actually do see a sharp tightening of liquidity, it won't last for very long. So they'll be very bearish short term, and potentially bullish, short, even also short term, but just a little bit longer term, because these central banks have no appetite for true liquidity crises. And then structurally, I mean, of course, some sort of return to monetary normalcy. I mean, we've got to always point out that that's a possibility, even though it's clearly a very low probability. I mean, just don't see how we get there. You could speak for hours about that, but where's the political appetite to have some sort of, monetary and fiscal rectitude? That just no one talks about that. We don't even have like a Ron Paul anymore. Speaking about those, and then with regards to Bitcoin specifically, maybe this is less relevant for crypto, but I do. It's something that does increasingly take my interest is, of course, something like Bitcoin maximalism and the potential. And I'm not, fully, I haven't fully not fully convinced in my mind that it is, like the death of Bitcoin, because I do think that Bitcoin is based on principles, and a group of people who are, maybe more, not maybe, are clearly more dogmatic and more militant. Of course, they can have an impact, but do they determine the end state outcome of that asset? I'm not entirely sure of that. I still think it's an asset based on principles, and those principles are compelling to lots of people. But I'm obviously thinking about the risks, and it's clear that it's increasingly clear to me that the maximalism does close people's receptiveness to innovation, and that is a concern. Culturally, that's a concern. I just think that people should be open-minded to new ideas. Even you can still invest all of your money into Bitcoin if that's what you want, but still be open to the potential ideas that other technologies could bring. It just seems ridiculous to completely push them away, and that's what a lot of Bitcoin maximalists do these days. They completely dismiss anything that happens on any other protocol just because it's happened on some other protocol, which is, that's just nonsense. So anyway, that's something certainly to consider from a Bitcoin perspective. As I said, I'm still not convinced that maximalism is the death of Bitcoin, even if it persists, but it's definitely a risk.
And actually, you just had a good post on that, so I'll link your last blog post going into a little bit more detail on that. It's fascinating. And maximalism, we see it firsthand, like at these meetups, right? You have the like the ETH crowd, the Solana crowd, the Bitcoin crowd, and like they don't really play well with each other at times. And it's more of the like total dismissive of whatever's happening over there that's the real problem, because whatever, your allegiance is to one group, so like obviously you think that's the best stuff that's happening, but when you completely write it off for the sheer fact, the only fact that it is existing over there, that's when it gets pretty difficult.
Completely. And I mean, we said this at the start, but this is why I do think, in-person meetups are so important because, like my bias is towards Bitcoin. I'm happy to say that for certain reasons. It doesn't mean I dismiss everything taking place elsewhere. I have my concerns about proof of stake. I'm not sure if it's the best consensus mechanism. But I'm not going to just dismiss it out of hand. Anyway, the point I was just making is that that's why it's so good to meet in person and really and ask people these questions numerous times and be open-minded to just listening what their answer might be. And I mean, it's something we were speaking about recently, is that when you are having these conversations, you build and you can actually build an openness to the ideas. You can build a familiarity and just be like, well, maybe it's not a terrible idea. Maybe,
Mm.
Because life is uncertain, the future is uncertain, investments are uncertain, and you've got to kind of look at things in a balance of probability perspective, not just
Mm.
be entirely dogmatic. And as I said, you can still be in that position and hold all of your capital in Bitcoin if that's what you want. But yeah, it's useful to consider the other perspectives. And yeah, what some of the things I said in that post that I would think it was just interesting looking at the history of this block size war, and I think it actually had a lot of good impact for Bitcoin because I do think it was good to confirm the protocol rules
Mm.
and focus on store of value and scarcity and decentralization and security. But I think that the potentially unintended consequence was this militancy that developed and potentially a dogmatism within some of the culture.
Mm. So we've touched on a lot of things like bullish and bearish scenarios, but I'd be curious, what keeps you up late at night when thinking about being bullish on Bitcoin? Like, what's the most terrifying thing that kind of eats at you about being bullish on something like crypto and Bitcoin?
I mean, maybe maybe I'm not worried enough, but yeah, well, the things that I worry about is more like just managing liquidity appropriately, actually, over the short term. I feel like um I feel like all of these big picture things I obviously think about and I debate, we've spoken about them, some of them here. What is the risk of alternatives? What's the risk of, some sort of monetary collapse? What would you do in those type of conditions? Um, but yeah, at the end of the day, worrying doesn't do people too much good. So I think more what worries me is it is the short term volatility and just managing that appropriately because I'm clearly very bullish on the asset class and I want to hold as much of it as possible. But you need enough kind of liquidity in the short term to make sure that you're not exposing yourself to any undue financial risk. And yeah, that's my honest answer is that's probably what worries me the most. Just managing
Awesome.
that effectively. I don't want to be I want to hold enough. I don't want to be short this asset class. But yeah, you also don't want to be too leveraged to this asset class that you incur yourself, self personal financial risk.
Indeed. Rob, it's been a pleasure. I will link up all of these things we've talked about in the show notes, but where can my listeners find out more about you, Sound Money, wherever you would like to send them? Let them know now.
Yeah, I mean, I have a Twitter handle, I think it's Sound Money M, but I don't spend a lot of time on Twitter these days. You can also go into my website, which is soundmoney.capital. But yeah, you can send me a message on Twitter or on the website. Sign up to our mailing list on the website is a good place, and I'm always keen to get people's questions and queries and corrections. So please shoot them through.
Awesome. And you're a deep thinker in the space, and I appreciate your thoughts and insights, and I know my listeners will as well. Been great having you, and I'll see you later tonight, man.
Nice one. Thanks, Ben.
See you, Rob. There you have it. Thank you for listening. I really appreciate your support. Show notes, transcript, links, and more can be found on our website at altassetallocation.com. If you'd be so kind, please share this with anyone you think might be interested or get some value from this conversation. If you have any questions or comments, please reach out. I'm always happy to hear them. Lastly, if you're on YouTube, please like the video or subscribe to the channel. If you're listening to the audio version of this, please subscribe to the podcast and or leave a review. This really helps more people find the podcast, and I really appreciate it. Thanks again, and hope you have a fantastic day. Happy investing.